All right, now let's get a check on what's playing out in the markets. Starting with the African continent, we see it's mostly negative at intraday. We see markets for the NGX. Definitely, the NGX had a good outing yesterday, and we're definitely hoping that continues today. But from the intraday numbers, 0.55 percent down, 103,841 points. That's for the NGX, losing that 104,000 level in South Africa, 0.16% up, 84,322 points. So yeah, there you have it there for most of the markets in Africa. It's mostly negative. But let's unpack some earnings now. It's earnings season, and most of the corporates here in Nigeria are already dishing out most of those reports. So we see for the Q4 and full year, we're going to be focusing on consumer goods today. Cadbury Nigeria PLC reported a loss after tax, about 10.4 billion for the year ending December 31st, 2024. That's about a 45% reduction compared to about 19.1 billion naira loss recorded in 2023. Then for Guinness Nigeria, they reported a 20 billion naira profit 6 months after the Toleram takeover. So definitely that seems to be working out, for the company. So to help us unpack these numbers, we have Bolade Agbola. She's an investment research analyst at Chapel Hill Denham. Great to have you on the show. Good afternoon.
Good afternoon. Great to be here.
So yeah, looking at those numbers, definitely focusing on consumer goods at this point. Let's look at Cadbury now. What do you think contributed to the 45% reduction in their loss after tax for the year 2024?
We highlight that, Q4, if you look at the Q4 standalone performance, it was positive as we saw improvements in revenue. But, even despite the higher cost of sale, operating expenses, the company was still able to post profits in Q4 2024, which we attribute to a much more stable currency in that period. And given the expectation that this stable currency will continue into 2025, we expect that they will have improved earnings. So the Q4 positive performance in Q4 is what supported full year 2024 performance, that there was a reduction in loss, compare the loss for 2024 to compare it to 2023, it was much better. So we are seeing signs that if we have a stable currency, some of the consumer goods performance would continue to improve into 2025, which is the same thing that we saw in Guinness, although Guinness, because of the calendar year, is it's their H1 2025 that was a loss. But if we look at October to December period, we also saw that it recorded significant profit, about 11.5 billion naira. So we would expect that going forward into the year for Guinness, which their end of the year is June, they will post profits, given a much more stable currency and improved revenue, as well as effective management of costs in the period.
So, looking at these numbers, and, definitely you alluding to the fact that if the currency stays stable, then I guess these companies are out of the woods, when it comes to, most of the losses that we've experienced in 2023, coming into 2024. So at the end of the day, if the currency stays stable, I guess it's all good.
Yeah, I would expect it that, it should be all good, especially for companies that have taken drastic steps to remove FX loans from their books, and companies that are implementing policies or strategies in terms of product mix, and also in terms of operational efficiency. So we'd expect that, full year 2025 will be positive for every consumer goods company, and in 2026 would expect that they will return back into paying dividends, and even some in 2025 we expect them to pay dividends at the end of 2025. Yeah.
Right, and talking about dividends, at this point, I saw the banking stocks were on fire yesterday, with the counter rising a lot, and most of the banks there, with the likes of FDNH also, adding to their share price. What do you think is going on at this point? Is all attention shifting to the banks right now?
For the buying sentiment that we're seeing in the banking sector as of yesterday, two major highlights are what is driving the positive sentiment. First is the positive notion about capital raising in the sector. Yesterday we saw Zenith also, release that they've been able to raise the capital that they applied for last year, and then it's been approved. So that's one of the reasons, which we believe that the investors are, buying into the stock. And secondly, is positioning for full year dividend. We expect that the full year dividend for banking stocks will be higher in comparison to full year 2023. And we've seen this trend as of their H1 dividend release, specifically for GTCO Zenith, which declared one era dividend in H1 2024, which is 2 times higher than what was declared in H1 2023. So I believe those are the two reasons that investors have been buying into banking stocks.
Right, and with this sentiment right now, I guess investors are chasing most of those dividends. How do you think it's going to play out for the all-share index in this first quarter of 2025?
For the auction index, I believe it is going to be positive, especially the fact that like I said, in terms of earnings of the banking sector, is going to be good, and we see some recovery in the consumer goods sector, which would spur buying sentiment in that sector. And this combined because most of the tickers in the banking sectors are like large cap tickers, so we expect that to support the positive sentiments for the overall market in H1 2025.
And looking at today, we're seeing at intraday, market was down about 0.5%. Is this an indication of profit taking, and do you think that's continuing to the close of trade today?
Yeah, so we'd expect that the market will close in the red today. And we saw that profit taking is on tickers that has gained significantly, and especially banking tickers. Apart from the gains we've seen yesterday, if you compare the current price to the offer price of when these different banks came to the market to raise capital, there's been a significant increase. So the listing of shares of the listing of the new shares would definitely expect that investors will take profit given the significant increase. However, we don't expect it to be so aggressive as we expect that investors will also position now in so that they can partake in the dividend that will be paid in full year 2024 for full year 2024.
Right, and I'm sure some investors have their eyes on MTN Nigeria at this point. It did, give a couple of gains last week and about 2 weeks now. What are you seeing for that stock?
For MTN, I believe that the positive sentiment about the implementation of the tariff, which happened in February 1st, is positive for the company, and because by Q1 2025, we'll be seeing the positive impact of it in terms of revenue and in terms of earnings. And I believe that this would overshadow the expectation of a not so impressive full year 2024 result, and that will continue to foster buying sentiment in the stock going forward.
All right, we'll keep our eyes on that one. But are you seeing any surprises coming, for the market in the short term? January is almost over now. We're getting into February. What are you seeing for February?
For February, I also think that because we'll be seeing much more releases, and expectations of most companies that will be releasing is quite positive. That's for the full year financials. I believe that that would spur buying sentiment in the stock, in different stocks in February, both the banking sector, the consumer goods sector, the industrial goods sector, and expectation of improved dividend or dividend payments for 2024 full year would also spur activities in this sector. And for 2025, like going forward into the year, we also expect we don't expect significant surprises, even for the banking sector, which we believe that we expect a moderation in interest rates. We don't expect it to be that such a sharp drop that would result into single-digit levels in 2025. So we still expect that earnings will still be good for the banking sector in 2025, and we believe that that would spur activities in the markets in 2025 and for 2025.
Right, and in 2025, what sectors do you think might end up being the laggards, when it comes to attention from investors?
I didn't quite get what. I didn't quite get the
Yeah, what
question.
sectors do you think will be the laggards, when it comes to investor attention, going into 2025? We had the winners, in 2024, but at the same time, we had stocks and sectors that didn't do too well in 2024. What are you seeing for 2025?
So I would not say laggard. So in terms of the five major sectors under coverage, talking about the banking sector, the industrial goods sector, the consumer goods sector, insurance sector. So I expect that in 2025, we might not see significant buying sentiments, buying sentiment in some sectors in comparison to the others, because different things drive sectoral performance. For the banking sector, we still expect earnings to be good, and so we expect buying sentiments in the sector. For consumer sector, it's more of a recovery year for them, so there will be buying sentiments in the sector. For the insurance sector, we've seen the bill being passed for the recapitalization of different companies in that sector, which we saw was a catalyst last year, and we expect that in this year, because of how fast the regulator wants this recapitalization in the insurance sector, we expect it to drive that the bill is approved and becomes an act, and then we'll see some buying sentiment, we'll see continuous buying sentiment, because currently we are seeing profit taking for insurance sector. So for oil and gas sector, we also expect positive sentiment in that sector to be driven more in terms of volume production rather than oil price, and also innovations by the companies in that sector. So generally, the sentiment is largely positive, even for the industrial goods sector. So I cannot say there is a particular laggard in terms of sector. Maybe in terms of stock, that's where we can talk about much more laggards and in comparison to the others.
All right, we'll definitely keep watching and see which ones outperform in 2025. I was talking about most of the stocks. Thank you so much. That was Bolade Agbola, an investment research analyst with Chapel Hill Denham. Thank you so much for coming on today.